Ladies and gentlemen, I welcome you all to the Q2 FY24 post-earnings conference call of Menon Bearings Limited. Today on the call from the management we have with us Mr. Arun Aradhe, Whole-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also a reminder that this call is being recorded. I would now request the management to give us a quick detail about the performance highlights for the quarter that went by, the growth plans and visions for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thank you, Mr. Vinay. So good afternoon and warm welcome to everyone, and wishing you all a very happy Diwali and prosperous New Year. To begin with, I will tell about the background and business of the company, broad industry updates, and strategies going forward. This will be followed by operational and financial highlights for the quarter ended September 23. Menon Bearing is strategically located at Kolhapur in Maharashtra near Auto Hub Pune, having 4 plants with 3 verticals of products line: engine bearing, bushings, thrust washers, various bimetal strips, aluminum die casting, and brake lining. We are the manufacturers and exporters of bimetal components, aluminum casted products, and have recently ventured into a new segment of brakes. In the bimetal category, we make bearing, bushings, and thrust washers. These are highly critical moving engine components that operate in high temperature and pressure. In the aluminum casting segment, which we refer to as ALCOP, we manufacture critical aluminum alloy parts for both auto and non-auto usage. In the brake segment, we have set up plant and machinery to manufacture brake linings, which are made from eco anti-friction asbestos-free material. Not only we have rigorous quality check procedures, but we also have an in-house machine building capacity, which results in significant saving in capex. This tooling capability gives us an edge over our peers and helps us to provide complete engineering solutions at competitive prices. We are also among the few companies having facilities to produce next generation lead-free material so as to produce parts which can cater to future emission norms. Our products have long and highly collaborative development cycles and hence require rigorous testing and validation before they can be assembled in the parts, as the products are critical in nature. And there is a high gestation period for supply approvals. There is a high entry barrier in the industry with a limited number of players. Our strategy is to do additional capex in bimetal and ALCOP segments so that we can not only cater to the surge demand from auto sector, but will also add to more share of our revenue from the non-auto sector also. We have capabilities of manufacturing wide range of products which are supplementary to our current product segments, and the company will always be open to new margin accretive opportunities to fuel future growth. Our major customers are Tata Motors, Tata Cummins, John Deere, International Tractors, Mahindra & Mahindra, Brakes India, Concentric Pumps, and exports. Our OE customers are Cummins, John Deere, Allison, Magna, Arrow, Adamco, Honeywell, etc. Our exports is mainly to USA, Japan, UK, China, Belgium, France, Netherlands, South Africa through distributor in Dubai. We are having pan-India network for aftermarket with 40 field staff and 1,000 plus dealers and distributor network. The performance so far as sales and net profit is concerned for the quarter ended on September 23. The total income for the quarter stood at 51.12 crores, and that for 6 months ended, it was 106.27 crores. The profit before tax for the quarter was 8.35 crores, and that PAT was 6.30 crores with percentage of 16.33 and 12.32 respectively. Our gross profit for the quarter ended stood at 21.71 crore, that is 43.30%, while EBITDA is 10.32 crores, that is 20.58%. We expect to increase demand from tractor segment from December onwards. All efforts should be taken to exceed performance of the last year. For over a period of time, the company is consistently sustaining EBITDA of around 21 to 23% with PBT of 17% and that PAT between 10 to 12%. If we look at sales pie of the company, about 55% is OEM, 30% is export, 7 to 8% is aftermarket. The company, as its policy, has kept comparatively large base of customers so that no single customer contributes more than 10 to 12% of the total revenue of the company. Current capacity of bearing division is 40 to 48 million pieces per month, which will be augmented to 55 million pieces by the end of this year. Current capacity utilization is around 70 to 75%. The present order book position of the company is around 250 crores. Bearing division has so far received RFQs from 8 new customers, most of which is for exports, for 128 parts. The quantity thereof is around 1.15 crores per year, with annual business of rupees 36 crores. Samples and commercial thereof have been already approved. In view of this additional requirement, the company has approved expansion of the existing facility and constructing 45,000 square feet of building in 2.5 acres of land, and that the same will be completed in all respects by the end of this financial year. Similarly, in aluminum division from existing as well as new customers, the company has received RFQs from 5 customers for 38 parts with annual quantity of 7.50 lakh numbers with annual business of rupees 28 crore. In order to accommodate this, the company is constructing 65,000 square feet of building, and with machinery, etc., the expansion will be completed by the end of this financial year. Even though volumes for exports are sliced down, we expect to recover in the coming quarters. Growth in coming quarters will be fueled not just by brake segment but also by Alcohol growth, as it is a premium margin segment and has more scope due to customization needs. With strong OEM sales and secure customer relationship, we have the confidence to deliver better results. With this, now I would like to open the floor for question and answer. Please.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. We have the first question from Himanshu Upadhyay. Himanshu, you can go ahead, please.
Hi, Himanshu.
Yeah, hi. Happy Diwali and Happy New Year.
Yes, thank you very much.
See, my first question is, last year the exports of bimetal bearings sales fell, okay? How has the exports done in last 6 months? Some idea on that can you give? And we had said that Japan was a issue market for us. Is that market coming back, or some more granularity will be helpful for the last 6 months?
One second. The export has slightly came down because of there was little less demand from Japan, basically Japan. That is the only reason. Otherwise, in products, there is a surge. Actually, it has remained more or less constant so far as export is concerned. If we look at the domestic sales, there was a little bit of slice down in the tractor segment, which is expected to go up from December onwards. And what we see now also, we are getting more and more orders so far as tractor is also concerned and from other exporters as well. So exports as well as domestic segment. In both the segments, we expect that we should be having better prospects in the period to come.
But the fall in sales in the last 6 months is because of the fall in exports of bimetal bearing. Would that be right statement?
Basically, bimetal strips.
Yeah.
Bimetal strips, not in products.
Okay. Okay. And this order book, what we stated of 250 crores, okay. So this is over what duration the order book is for us, what we stated.
Pardon?
We stated in the call recently or just now that 250 crore is our order book, okay.
Okay.
So this order book is over what duration, okay. So
What duration? That is for the 1 year from now.
Okay. This 250 crore is 1 year, okay.
Yeah.
I have few other queries. I'll join back in the queue.
Sure, please.
We'll take the next question from Harshil. Harshil, you can unmute and ask your question.
Hi, sir. Good afternoon.
Yeah,
I had two questions. Sir, we were talking that we were working with Bajaj to supply some components for their premium segment, which is KTM. So now even Triumph and Harley are being made in India. So are we looking to get into that segment provided we get our desired margins? So just as to diversify from the current CV and tractor space.
It's not only the case of diversion because you see the sizes and diameters of the bearings of KTM are higher than the regular two-wheelers. It is almost equivalent to what we have in Maruti or even more than that. So the value addition where is also better and we will never compromise on our margins as well. So we'll keep the margins intact and we'll sustain the EBITDA or whatever PAT margins always similar. So we will not compromise on that count. Because not only that, I already told you in the call now that almost 128 parts are there. And the total quantum of the volumes of the numbers will be 1.15 crores during the next year. That is additional business we are going to generate. It will take little time. Maybe after March, some business will start from April onwards, and some business is expected to start from July onwards because it will take little more time for testing and validation and approval of samples, and that's all. But that is final because commercials and samples, most of the samples have been already approved.
Understood, sir. But sir, this can be an opportunity for us given that the premium bike segment is increasing. Just wanted your thoughts, and because we already are working with Bajaj, so Triumph, Harley can also be an opportunity.
Yes. There are many more segments that we will be tapping up because you see, we want to enter into the higher diameter segment, not the smaller diameter.
Okay. And sir, last question. Our debt has increased by 12 crore. So is that for the capex that we are doing of 30 crores and 50% would be financed by debt? Is that on account of this?
Which one?
So in the half yearly balance sheet, our debt has increased by 12 crores.
Yes.
So is that purely for the capex that we are doing?
That is earmarked for the capex in bearing division that I already told you that we are going to have 45,000 square foot of building along with all machinery, etc. So we have kept that aside for the capex for that.
Yeah, I understood. any more plans to take debt, because 30 crores and 50% is 15 crores, and that has increased by 12 crores. So any plans to take more debt?
You see, at the same time, our bank balances are also equivalent. So hardly there is a difference of almost 4 crores of rupees between the term loans and the cash and bank balances.
Understood. Yeah.
Yeah.
Thank you. That was my question.
Yes, yes.
Thanks, Harshil. We'll take the next question from Naga Brahma.
Hello, Mr. Naga, how are you?
Very fine, sir. How are you, sir? How was the Diwali celebration?
Diwali celebrations were fantastic.
Good, good. Great to know that, sir. Sir, I had two questions. One is for the brake, shoes or the liners. So, is it possible to share how much sales we have done for this half yearly, sir, from this division?
I felt that was the starting point. We are spreading our wings into the aftermarket. We are adding distributors every month.
Okay.
So now we have received export orders for that also.
Okay.
So export orders are for more than rupees 1 and 1.5 crores.
Okay.
That's already in process. We have started dispatching from the last month.
Ah.
So you will see the figures which
Okay.
can be spelled out during this quarter.
Till H1 we have done what, around 50 lakhs or so?
Not more than that. It is around 75 lakh.
75 lakhs. Okay. So based on the receipt of orders that you have on hand, how much is expected for the current year?
Current year, I expect about 7 to 8 crores.
So from 75 lakhs, it's almost 10 times you have the orders in hand for the
Yes,
brakes.
yes, we are already having the orders.
Okay, good, sir. Sir, and how much we can expect next year? It will again grow exponentially.
Next year, we should be reaching to almost 16 to 17 crores.
Very good. And sir, when you reach what capacity, if you reach, you will have the same margins as the other products?
If we reach to about 19 crores.
19 crores in a year.
Yeah.
Okay, good. Sir, my second question is for the Allcop division. Now we hear, all this US and Europe rate of interest increasing and all that inflation and recession. Allcop division was supposed to get a lot of orders from the Europe, US, and other countries. So have you seen any decrease in the inquiries or the orders, sir?
Just now I told you, there are inquiries from 5 customers for 38 parts and numbers will be 7.50 lakhs per year with annual business of 28 crores.
Okay.
Almost all of that has been, the samples have been approved. Commercial are also approved.
Okay.
Those are under testing now.
Okay. So this will be supplied during H2?
H2, it will be supplied in the next year.
Next financial year.
So some of the parts are under development, which can be supplied in this year also. Some of the parts.
Some of them, sir. If you are, if you have the figure, if you can share how much we have done in H1 comparison to H1 of last year, sir.
No, that figure is not available exactly what was in the last year 6 months and now.
Okay. No, whatever. That means, have we grown in this segment also?
Yes, yes. We are growing.
We are growing. Okay. Okay, sir. Thank you very much and wish you all the best, sir.
Thank you.
Thank you.
We'll take the next question from Anik A. Anik A, you can go ahead, please.
Thank you, sir. So my first question is, can you throw some light on the growth opportunity and strategy in your new brake shoe and brake lining business?
Yes, in brake lining business, our aftermarket is growing steadily. From rupees 10 lakh, we started in a month from April. Now we are reached to 40-45 lakh of rupees per month, apart from the export orders that we have received for more than 1 crore per month.
Okay, so the second question is regarding your presentation that shows a point about you being in an oligopoly industry in the engine bearing segment. So can you elaborate on this a bit more, as in how many players are there, or why only that many players, and how does that help us to build up in our market share?
You see, so far as bearing, you are talking about bearing, no? Bearing division.
Yeah, yes.
In bearing division, there are major 4 players, that is Menon bearings, and our competitors are Bimetal Bearings, Federal Mughal, and KSPG. All are multinational companies and we are fighting with them. which is the only Indian company. And because of rigorous testing and validation requirement, and it requires a little longer time for getting approval from all OEMs and maybe for exports also. So there is an entry barrier. So no other people are coming into this segment. It is unlike escape kind of ball bearings or something else. This is an engine bearing bushes and washers which are fitted in the engine and on maybe on transmission and brakes, which are critical items. So there is an entry barrier. So nobody come, Tom, Dick, and Harry come and start this kind of business and approach OEMs. They are not going to allow them. So there is an entry barrier. So there is good amount of potential for us. We are only the four major players in this field, so far as bearing the division is concerned.
Okay, okay, I got that. Okay. So the last question would be that you mentioned that your minimum EBITDA margin target is 20-22% from your key business.
That is
Isn't this? Hmm.
we have been sustaining for that so far for many years.
So basically, what it allows you to the capability of earning such high EBITDA, as in, can you explain it more?
So that is our productivity. Then I told you that we are having own machine building capacity in bearing division. Because of that, our capex requirement is comparatively very less as compared to our competitors. So pricing is also competitive. The cost, overall cost will go down. Because of that, interest cost will come down, depreciation will come down, and because of that, we become more competitive and having more margins and gross profit, which you can see it is 43%.
Okay, okay. So that's it from my side. Thank you so much.
Thank you.
So just an addition to what Aniket was asking, in your brake shoe, brake lining business, can you throw some more light on how do you plan to approach this market? What's the thought process? And I think you are doing some asbestos free as well, you know. Can you throw some more lights on
We are
that?
doing it only eco-friendly asbestos-free brake linings only. We are not with manufacturing with asbestos, because we want to be eco-friendly. So we are already having a pan-India network of Menon bearings where more than 20-30 people are already working. Apart from that, we have employed 10 more people for this aftermarket business of brake lining. We are spreading our wings into the aftermarket, and we are approaching more and more people and uh, appointing more and more distributors in this segment also. So with this opportunity, we are sure we will definitely reach to more than 1 crore per month within a shortest period of time from now.
Okay, okay. All right. We'll take the next question from Aditya Surana. Aditya, you can unmute and ask your question.
Good morning, sir. Good
Yeah,
good afternoon, sir.
good afternoon.
Sir, we operate in the same business line as a listed peers do, which have EBITDA margins ranging from 7 to 8%. In contrast, our company boosts EBITDA margin of 23 to 25%. How do we constantly achieve such elevated margins compared to the other players in the industry?
You see, I just now clarified as to why our investments are comparatively capex is less. Why our investment pattern is comparatively lesser, because of which finance and depreciation costs are lesser. And these are all semi-automatic machines, so that we can work with minimum labors also. And with the greater productivity of semi-automatic machines, with greater productivity, the costing of overall it comes down, which helps in extracting such kind of EBITDA margins for a period of time, and we are continuing with that now.
So I have another question. After completing the 30 lakhs capex, what will be the total manufacturing capacity and what would be the anticipated revenue increase post capex and the estimated time framework for completing the investment?
So it is not 30 lakhs, it is 30 crores. Before that will be completed by the end of this year in both bearing division as well as in aluminum division, because of which our revenue is expected to increase by another 75 crores. And with additional capacity which is available at our disposal, that is 25%. we can easily reach to about 400 crores within a period of 2 to 3 years. Within 3 years, you can say.
And sir, what are the current trend in the export market and commercial vehicle? Where is the demand coming from, and which country is the major contributor?
It's always a Japan and USA major.
Thank you, sir. This was all my
Yeah,
question.
thank you.
Thanks, Aditya. We'll take the next question from Bharat Gupta. Bharat, you can unmute, please.
Hi, Arun sir. Happy Diwali.
Happy Diwali. Thank you.
Sir, just a couple of questions from my side. So, back in May, when we did the last phone call, so you mentioned that you were having a RFQ of near about 100 odd crores, so spread across bimetals and Elcop.
Right.
So, what has happened progressively? Like, how many RFQs we have been rewarded so far? Over the H1?
Out of that, many of the RFQs and samples have been sent to them. Those are under approval. After testing and validation, that business will also start.
So, sir, any timelines which we are anticipating?
Timeline, you see, I have already explained that in the past, also in the earnings call. It requires almost 7 to 8 months from receipt of RFQ to actual start of business. Because you see, the process is such that we have to get the RFQ, then we will check the feasibility of the product, whether we can manufacture that or not. Then we are sending them the feasibility report. Then we are getting drawings from them. After drawings, those are being compared here. Then design drawings are prepared. Then these are sent to them. After approval of drawings, then we are sending them the details about the tooling required. Then after receipt of order for tooling and samples, we go for preparation of or manufacturing of samples. We will have to prepare the tooling for that first. Then after the preparation of tooling, we have to prepare the samples. Then samples are sent for the inspection. Then they inspect the samples. Then they are testing and validation for I don't know exactly how many hours, but I feel they require to fit on the engine and get trials for almost 2 to 3,000 hours of trials they are required to go undergo. And after that vigorous testing and validation, then we are receiving the samples are approved or not. After the approval of the sample, then they are issuing this first sample or first purchase order for supply of the bearings or bushes or washers, whatever. Then it takes almost 7 to 8 months to 9 months, right from receipt of RFQ to actual start of business.
Right, right. And so you mentioned in your opening remarks that we are working on near about 70 lakh pieces, I think, in the Alcock segments for 38 parts. So that is excluding the 100 crores RFQ, which is there in with the secular total customers, whatever kind of RFQ we are in.
I could not get you because your voice is echoing.
Oh, sorry. Is it better now?
Yeah.
I was just asking, sir, you mentioned in your opening remarks that there are near about 75 lakh pieces of RFQ which is there in the LCOP segment for 38 parts in with respect to 5 customers.
7.50 lakh.
7.5 lakhs, sorry.
Right.
So that is excluding the 100 crore RFQ which you mentioned in like in your previous calls.
Yes, yes.
Okay, so this is over and above. So, sir, factoring nearly the 100 crores RFQ will come in place, and we will be winning more market share in the brake lining segments, and with the Alcohol segment also contributing. So, the doubling of the turnover, it should ideally be happening on a like we would be growing on an exponential basis, I think, with a factor of more than 25% going forward.
Yes, yes, of course.
Right. And margins we tend to operate, we'll be maintaining a 21-23% kind of EBITDA margin going forward as well.
We'll operate with the margins of EBITDA margins of 20, more than 20%.
Just a last bit from my side, sir, with respect to the capex which we are doing, the 30 crores or capex which we have. So you estimated what kind of a asset turn which we can generate from the capex which we are doing?
As I told you, it will generate about 68 crores from that additional capex.
68 crores is the visibility which we have from the
additional capex.
And sir, we were supposed to have a tie-up with Hindustan Brakes, I think, with respect to the brake lining or brake shoe segment. So any progress on that front?
Hindustan?
Brakes Limited. You were mentioning in your last call that you are
That is
looking out for.
We are not
mentioned.
tying up with anybody so far as brake lining is concerned, and that is not Hindustan Brake, that is Hindustan Composites.
Okay. So no tie-up we are looking out for with respect to any OEM player.
No, we are targeting aftermarket only. And after the completion of aftermarket and exhausting the entire capacity, then we will start approaching OEMs.
And with respect to the RFQ, we have the sufficient amount of capacity available.
You're talking RFQs of whom?
I'm talking with respect to both. Like in terms of currently, our capacity will be underutilized in the brake lining segment. What you mentioned that 16 to 20 odd crores of the revenue which will be generating out in the next year. I think by that time our capacity will be nearly 30-40% utilized, right? This is one bit. And secondly, with respect to the RFQ, so there, what kind of a capacity addition would be required for meeting all the RFQ requirements? This is my second question.
I never talked about RFQ so far as brake lining is concerned, because we are targeting aftermarket, not OEMs. The question of receiving RFQ in brake lining doesn't arise at all.
No, sir. This is a different question. First question was with regard to capacity utilization, post reaching out a 20 crore kind of a revenue from brake lining segment. What kind of a utilization level we'll be having in the brake lining? And secondly, that 30 crore capex which we are doing, that is including the RFQ part as well. There is some bit of RFQ, the utilization which will be requiring for the RFQ part. That is also inbuilt in 30 crore capex.
The second question, I could get it. That is around 30 crores capex is required only for additional RFQ that we have received of about 68 crores. And that will be exhausted entirely for that. Majority part of it will go to exports. So far as capex in brake lining division is concerned, I could not get your question properly because your voice is not clear.
Sir, I'm just asking what kind of a utilization level we'll be operating with the 20 crore revenue in the brake lining segment.
That will be 100%.
Okay. So further capex which will be required in that particular segment as well going forward?
That we will look into that after next year, not now.
Okay. Thank you so much, sir.
Okay, thank you.
Thank you, Bharat. We'll take the next question from Shweta. Shweta, can you unmute, please?
Sir, am I audible?
Shweta, you'll have to speak up a bit louder.
Sir, am I audible now?
Yes.
Sir, can you guide us for your growth target for this year and next year?
Target?
Yeah, for this year and next year.
So I can tell you that this year will be growing at a rate of 12%. And from next year onwards, we will be growing at a rate of 22%.
And sir, any other new products that we are evaluating right now?
No, not now.
I also had a question. Sir, where do you see your export sales improving again? Like any sign of from your global customers like Japan to increase?
You see, as I told you, majority of the RFQs that we have received just now, maybe in bearing or alcohol, both, 70% will go for exports.
So post expansion in capacity, what potential turnover size can we reach?
potential capacity as such that will be entirely exhausted and we will be getting out of 30 crores. We expect a revenue of around 64 to 70 crores from that.
Sir, with respect to the brakes business, how do you plan to build up in the replacement market to target growth in this segment for the product?
We have already appointed about 30-35 people into the aftermarket and they are approaching and appointing many more distributors. As of now, so far as only brake lining is concerned, we are more than 50 distributors just now and our target is to reach to almost 150 within a period of 6 months from now, so that our turnover will reach to the maximum. What is required is about 19 to 20 crores, as I told you.
Thank you.
Thank you, Shweta. Before we go to the next participant, anybody who wishes to ask a question may use the option of raise hand. In case you're not able to do that, just drop a message on chat and we will invite you to ask a question. We'll take the next question from Himanshu Upadhyay. Himanshu, you can unmute, please.
Hello.
Yeah.
Yeah, following on the brakes business itself, are the distributors who are already selling our bearings and those only the distributors whom we are focusing, or we are adding new distributors also for the brakes business? Okay. And currently, how many retail outlets we would be present in?
Now, because you see, the people and distributors, we are more than 300 plus distributors plus up to 1,000 retailers. That is different for bearing division. That is only for bearing division. They are not necessarily retailing our products of brake lining. So we are having entirely different set of distributors for sale of brake liners, which is around 50 now, which we want to increase up to 150 within the shortest possible time. And our efforts are going on in that direction only. So we are having a separate team for that also. Along with our existing team, they are also helping the new team to get the business and appointing new distributors for brake lining. So that is all efforts are going on.
See, our bearings are also for MHCV business and tractors business,
Yes.
and our brake linings are also for MHCV and
But
tractors.
distributors are many more distributors which we are already having. They are not into sale of brake linings. This is
Okay.
a little different category as such for them.
Okay. Okay. And are we present across the means north, west, east, south, or we are focused on certain geographies currently? Brake
At
line.
present, we are certainly focusing on certain territories and geographies. Our presence is now in Dubai and South Africa so far as brake liner is concerned. Then we are into Nepal. Then we are supplying to Bangladesh now and maybe Sri Lanka from the next month.
One
And
thing.
entire India except Jharkhand, Bihar, Gujarat, and Rajasthan.
Okay.
Our
Okay.
presence is almost everywhere now.
Okay. And one thing, we are seeing pretty strong growth rate in the capital goods side. Okay. Pumps, compressors, power plants, and all those places. Are we getting more business or RFQs for capital goods also? And some of these industries require heavy, let's say, the castings. Okay. So any opportunity for LCOP to become or get more business from the capital goods side?
In capital goods, we are receiving orders from Cummins, then concentric pumps, Gabriel, that is not capital item, you cannot say that. But John Deere is there, Mahindra is there, Cummins as it is already there. Then TMTL has approached us again. Many more people from John Deere USA have approached us for their parts. For compressors also, we received the orders from Maekawa, Japan. So certainly what you tell, that is also correct. We are approaching those people also for getting more and more business from that segment too.
So what I was looking at, or we are looking at, like it's Indian companies also, or Ingersoll or LG, Kirloskar, Pneumatic, and all those. Atlas Copco.
Ingersoll is already there. Ingersoll is there, Cummins is there, Maekawa is there, John Deere is there. There are many more. That is a continuous process that we are approaching newer customers. We are going to add new customers as well in the future. That is a continuous process and that would be followed.
See, the slowdown is in auto space, should we say. The capital goods segment or side of the business is still growing. And even Alcop grew in the first 6 months. Would it be right assumption?
Can you repeat the question?
No, so are we seeing growth on the capital goods side, and whatever slowdown is on the auto side? Will that be a right assumption?
I think that can be right.
Okay, okay. Thanks for the reply.
Okay, thank you.
Thanks, Himanshu. We'll take the next question from Chirag Shah. Chirag, you can go ahead, please.
Hello, how are you, sir?
Hello, how are you, Mr. Chirag?
All well.
Happy
Sir,
Diwali.
Happy Diwali, sir, and Happy New Year to you and the entire team.
Yes, sir. Thank you very much.
Sir, one suggestion was, sir. So you used to share a presentation earlier in which you used to give breakup of bimetal and bearing business, revenue breakup. If you can start that practice, it would be helpful to understand.
That is already uploaded in the on the website. On the website as well as on the website of exchanges, both the exchanges. You
So
can see
the
see
breakup.
that only today we have uploaded. So it
Yeah.
is little late, but you can see that because of Diwali vacation, we could not do that in time.
No, sir, in that quarterly breakup is not being given.
Yes, sir, that is given.
Okay, I'll just have a relook at that.
Yeah.
Great. Because I was trying to understand. The second thing is, if you look at H1, our growth is largely flat. How much of this is because of commodity pass through, and how much of this is some slowdown that you would have seen, and which, if at all there is some slowdown, which segments have seen a slowdown in H1?
That is mainly, I told you, that was just because of slowdown in exports so far as Japan is concerned.
Okay.
That was in bimetal strip only. Otherwise, in product, it has been constant or little more than that what we have done in the last 6 months.
So, be it tractors, be it CVs, or be it transmission products, so on and so forth, we have not seen, there is no revenue decline.
It is little more than that what we have done in last year.
Okay.
It is only because of bimetal strip slowdown so far as Japan is concerned, nothing else.
Okay.
Which will be compensated by exports in the next year, that we already issued the orders of around how much? That is 20 crores.
Okay.
From single company from USA.
And sir, if I recollect earlier, you were looking to or aspiring to have around 75 crore revenue coming from Alcop. Is there a delay in execution or order offtake by OEMs, or that 75 crore is doable? So we can
That is
do a catch up.
doable in the next year, because there was little slowdown in the first 3 to 4 months, 3 to 4, 5 months in tractor segment.
Okay.
And there, as well as Honeywell is concerned, you see there was a little slowdown in USA also. Because of that, slightly delayed. Otherwise, we would have targeted, as per the target, it was to be achieved in this year only. But better luck next time, next year.
Fair.
We will be exceeding that 75 crores.
Sure. And in in bearing side, what kind of revenues we can do for full year? And any particular segment that is indicating there could be some slowdown or some risk factor that could come across?
There is little slowdown in tractor segment in initial 4-5 months also that has
Yes. Okay.
affected bearing division also,
Okay.
which
Okay.
is expected to bounce back by December.
Okay. And the second question was on this brakes business. So, if I understand correctly, the phase one or the current plan could do around 20-25 crores of revenue, correct? And
Correct.
post that you will have to do next round of capex.
Correct.
And would it be fair to assume that the next round of capex, the call will have to be taken by end of the year itself?
No, next year. By the end of next year, not this year.
No, so you are saying that fair.
Yes.
Okay. Yeah. So that's it from my side. I'll come back for more questions. Then.
Okay, thank you.
Yeah.
Chirag, there are no further questions. If you want to ask any further questions, you can go ahead.
Yeah. Okay, sir. Another question which I had was on this optimal capacity utilization. So we are generally around 70% utilization levels. But up to what we can go up to in terms of utilization levels? Is 85% the right optimal capacity utilization level, or 75% kind
We
of
will
number
not,
is the...
we will not exceed 80% capacity because we want to keep always idle capacity for any surge of demand anytime.
Okay.
We normally don't allow to exceed 80% of the efficiency.
Okay, so your capex would trigger along with that.
Correct.
Great. So lastly, you were an aspiration of doubling your revenue over 3 years if everything falls in place. Now
Yes.
there is some slowdown because of tractors, which was beyond your control, and also some slowdown which we are seeing or we were seeing in some of the international markets. Any new product or customer addition that can compensate and you can still look for doubling of revenues over 3 years that your initial target was over F23?
Yes, because as I told you, the many more RFPs that I have received, considering that within a period of 4 years down the line, we can have the double the figure of what we are having just now.
Okay. So that's how. And so one last thing, the RFQs that we were won last year, okay, and which were supposed to get executed this year,
Yes, that is all.
have customers or OEMs delayed the start because of slowdown or inventory issue that they were seeing, or
Because slowdown, samples were approved, commercials were approved, everything was approved. We started the business also, but the quantity that was required has not come the way we expected.
Okay.
Maybe because of little slowdown.
But now has it started normalizing, or is that month on month uptick you are seeing?
It is getting normalized very soon, I think. It is getting normalized now.
Okay, sir. Thank you. Thank you very much. And all the best.
Thank you, Chirag. We'll take the next question from Khush. Khush, you can unmute.
Yeah. For the opportunity. So my first question was the tool designing that you said, which is there in a value chain. So tool designing is our ownership only, or it belongs to the OEM?
You see, when we are receiving the tooling cost from the customers, that is manufactured on behalf of the customer, and that becomes their asset. And we have to preserve it till the end of certain life.
Okay. And so I just want to confirm the doubling of revenue on FY23 base you said was in 4 years.
Right.
Okay. Thank you, sir.
Okay, thank you.
Thank you, Khush. So since there are no further questions, would you like to give some closing comments?
Okay, sure. I would like to thank you all for the encouraging response to our earnings call. We will keep updating the investor community on regular basis for incremental updates on the company. I hope we were able to address all your queries. For any further information, kindly get in touch with Captify Consulting, our investor relation advisors. Thank you once again for all. Thank you and have a very bright new year.
Thank you so much, sir. And thank you to all the participants for joining on this call. You may all disconnect now. Thank you.